Good morning. Here are the day's stories, presented as a short spoken script with each topic summarized in 3 to 4 clear sentences. 1. UAE's surprise exit from OPEC. The UAE announced it is leaving OPEC and OPEC Plus. Reports say the move takes effect immediately or on May 1, saying it will prioritize national interests and seek greater production flexibility to meet future demand. OPEC quotas limited the UAE to about 3.2 million barrels a day, while the country's actual capacity is roughly 5 million barrels, so leaving quotas could free up spare production, though short-term gains are constrained while the Strait of Hormuz is effectively closed. If the waterway reopens, global supply could rise further, perhaps adding the equivalent of about 1 to 2% of world demand, and OPEC's share of global output could fall from around 30% to roughly 26%, weakening its supply control and complicating coordination with Saudi Arabia and Russia. The UAE framed the move around energy security and low-carbon commitments. It did not consult other major producers first, and the exit follows precedents like Qatar, 2019, and Angola, 2024. 2. Iran were driving big swings across markets and daily life. Fighting linked to Iran and its control of the Strait of Hormuz has choked oil and gas exports and sent prices sharply higher. Brent spiked to around $109.50 a barrel in March and was near $111 in mid-April, creating supply shocks. Higher oil has supercharged profits at major oil firms. BP's trading helped lift first-quarter earnings to about $3.2 billion from $1.38 billion a year earlier, while infrastructure attacks in the Gulf have raised repair costs and output risks for regional fields. Consumers are feeling it. U.S. gasoline averaged about 4.18 cents per gallon, and UK household energy bills are projected to rise toward £2,000 annually, driving calls to preserve or expand windfall energy profit levies and to speed up renewable transitions. Central banks face increased uncertainty as oil-driven inflation and growth risks complicate rate decisions, and campaign groups are urging emergency help for households hurt by higher prices. 3. OpenAI misses growth targets. Musk's lawsuit goes to trial. Reports say OpenAI missed internal weekly user and revenue targets and that its CFO, Sarah Friar, flagged concerns about funding large compute contracts. OpenAI strongly denies the reporting and says it is committed to buying compute as needed. The news hit AI infrastructure and semiconductor names tied to huge reported compute deals: Oracle, NVIDIA, Broadcom, AMD, Qualcomm, and drove down NASDAQ and other growth-heavy indices, though analysts disagree on whether this signals a sector-wide shift or a temporary reassessment. Separately, Elon Musk's lawsuit against OpenAI has reached trial. He alleges the organization abandoned its nonprofit mission after 2019 and seeks removal of leaders and large damages, with internal emails and messages entering evidence. Musk may testify, and the court outcome could materially affect OpenAI's governance, IPO plans, and the broader competitive landscape for AI. Number 4. Bank of Japan holds rates but raises inflation forecast. The Bank of Japan left its policy rate at 0.75% in a 6-3 vote, with 3 members dissenting in favor of a 1. It cut its 2026 growth forecast from 1% to 0.5%, while sharply raising core inflation expectations from 1.9% to 2.8%, above its 2% target. BOJ officials highlighted the risk that oil price rises tied to the Iran crisis could boost supply-side inflation and squeeze real household incomes and corporate profits, slowing growth. The decision pushed the 10-year Japanese government bond yield toward about 2.49%, a post-1997 high, while the yen strengthened and the Nikkei fell roughly 0.5% immediately after the announcement. Policymakers described the move as a hawkish hold, keeping the door open to further tightening. Number 5. Supreme Court decision to determine fate of Haitian TPS holders. The U.S. Supreme Court will decide the status of more than 350,000 Haitians protected under temporary protected status